For many people, investing is a way to build a future. They buy stocks hoping the price will go up over time. This is a common and powerful strategy, but there is another reason to own a piece of a company. That reason is income. Some companies choose to share their profits directly with the people who own their stock. They do this by sending out regular cash payments. These payments are called dividends. They are a tangible reward for your ownership, arriving in your account like clockwork. They represent a company saying, "Thank you for your investment. Here is your share of our success." Dividends provide a steady stream of income. This can be especially important for retirees or anyone who relies on their investments to cover living expenses. The most recent dividend declared by Chevron's board of directors is a crucial piece of this puzzle. In its latest announcement, Chevron declared a quarterly dividend of 1.63 per share. That's 1.63 in cash per share you own. For 100 shares, that equals $163 for the quarter. This consistency appeals to income-focused investors. There are 3 key dates every investor must know. Record date, August 19, 2024. To receive the dividend, you must be a shareholder on the record date. Ex-dividend date, August 16, 2024. Buy before the ex-dividend date to be eligible. Buy on or after, and the seller gets the dividend. Payment date, September 10, 2024. Money arrives in your brokerage account on the payment date. These dates repeat every 3 months. 2024 payments, March, June, September, December, expected. 163 is not isolated, up from 1.51 last year. A dividend is a promise. A company's ability to keep that promise depends on its financial performance. The dividend is not paid from a magical fund. It is paid from the cash the company generates. Look at Chevron's earnings, and, more importantly, its free cash flow. Q2 2024. Chevron reported earnings of $5.1 billion. Earnings are the headline profit number. But cash is what pays the bills. Free cash flow gives a clearer picture. It's cash left after operating expenses and after capital expenditures. Capital expenditures include new projects and equipment. Q2 2024. Cash flow from operations was $6.3 billion. Capital spending was $4.2 billion. Free cash flow was about $2.1 billion. Chevron's balance sheet provides important clues about its financial discipline. As of the end of the second quarter of 2024, the company's net debt ratio stood at a very healthy 7.8%. This is a low level for the capital-intensive energy industry. Low debt gives Chevron immense flexibility. It means the company is not burdened by large interest payments, and it can better withstand a period of lower oil prices without having to sacrifice its dividend. Another powerful tool Chevron uses to return capital to shareholders is its share buyback program. A dividend is a direct cash payment. A buyback involves the company purchasing its own stock from the open market. This reduces the total number of shares outstanding. With fewer shares, each remaining share represents a slightly larger piece of the company, which tends to increase earnings per share. In the second quarter of 2024, Chevron repurchased $3 billion of its stock. The company has guided that it expects to continue buying back shares at a rate of $17.5 billion per year. That showcases confidence in its cash-generating ability and its view that its stock is a good investment. Of course, an oil and gas company cannot stand still. No company operates in a vacuum. To truly understand Chevron's dividend, you must see how it stacks up against its direct competitors. The world of integrated oil and gas giants, often called super majors, is a small club. Chevron's main rivals include companies like ExxonMobil, Shell, BP, and Total Energies. As of late 2024, Chevron's dividend yield is approximately 3.9%. This is a competitive yield within the sector. For comparison, ExxonMobil's yield is around 3.3%. Shell and BP have historically been higher, sometimes near 4.5%. A higher yield can signal higher perceived risk by the market. Beyond the headline yield, compare balance sheet strength. Chevron's net debt ratio is exceptionally low. ExxonMobil also maintains a very strong balance sheet. Chevron and Exxon are the most financially conservative Western supermajors. So, what does this all mean for a cautious investor looking at Chevron today, on October 21, 2025? The story is one of strength and discipline, but risks require monitoring. Watch the price of oil and the price of natural gas. Chevron's profits and cash flow are directly linked. Each quarter, dig into cash flow and confirm free cash flow covers dividends on a rolling 12-month basis.